Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, you never know what's going to happen in 2020. I was doing my analysis, already had started the front end of the video, when all of a sudden the market started to plummet. I went and researched it, found out that President Trump had announced that he has COVID, along with Melania, and the markets were in full-out panic with the futures trading down as much as 2%. So here's the plan for tonight's video. Since I am getting a late start, I'm going to do my usual brief introduction, and then I'll go through some basics on all of the elements you need to know to come into the open tomorrow morning. Then at 1:30 New York time tomorrow, I will do a live stream and we'll spend some time talking about what's going on. Way too much uncertainty to really do a detailed report tonight, but I will go through all the basic technicals and things that I've seen overnight with the actions. Let's go ahead and get into the video. As we look back on yesterday, we did see the employment claims come in as expected, but the continuing claims was under that 12.2 million level that I've been talking about over the last couple weeks. We came in at 11.7 million. So this was a bullish number. Markets acted really well throughout the session, responding to this news. We did trade up to some key resistance numbers that I mentioned last night between 33.97, 98. That was the key pivot. We printed 97 and change, got rejected, and we saw a decline. We still managed to close positive. I'll go through those details here in a few minutes in the technical section. As we come into Friday's opening, the expectation was we'd be focused on unemployment numbers, which we will be, and depending on what type of news comes out overnight into the U.S. Open will determine some of the volatility, but the unemployment numbers will still be key. They're expected to show a slight downtick to 8.3%. The jobs are expected to come in at 750,000. So there's not likely to be a big surprise. Some folks, based on the ADP report on Wednesday, are claiming that there might be a better than expected report come out. We'll see, and I'm not sure what the impact is going to be, and this is why I'm going to do this live stream on Friday. The other report that will be out that will be looked at reasonably hard tomorrow will be the University of Michigan Consumer Sentiment. That's expected to come in at 79. The consumer report earlier in the week came in really strong. We're seeing a lot of activity in the economy around the housing, and there's certain elements that continue to be very strong, and there's a positive tone. But the situation with President Trump is going to throw an entire different element into the analysis of the markets. Go ahead and dig into the charts and see what they're telling us for Friday. As we go through a quick review of the WaveTech database, we did see about 600 new buy signals and 150 sell signals. We got a bullish rotation going on in both short-term models. We've now moved the percent bullish up to 11.92%. So we're continuing to see recovery after several days of higher prices and stability, but we're still way under that magical 26% number I keep referring to over the last couple weeks. This is some improvement. We are seeing some traction, and depending on how the markets finish today on Friday, we're likely to continue to see some positive rotation in the short-term models. On the weekly models, we did drop last week down to 60.28. Critical bullish percent number on intermediate models is 42%. So we've got a long ways to go before we would see any kind of negative rotation really begin on the intermediate models. My expectation is that we're likely to see some minor rotation. Last week we did see about a 4 to 5% drop in the percent bullish. We're likely to continue to see some of that selling and rotation still set up on the intermediate basis, but I don't expect it to be material. As we review the S&P futures, we did see a spike down just below the STX number overnight, down to 3306. The S&P was down about 2%. The markets have erased about half of the losses that we've seen earlier in the session. So there is some stability. I suspect this is some minor short covering ahead of the opening and the news that I discussed in the opening comments. Pattern is becoming very interesting because one of the key elements here is the 21 period moving average at 33.38. We're currently trading 33.31. If you notice, PPM2 is at a minus 0.33, and this is in trend mode, which suggests that that 33, 37, 38 level is going to be key on the futures to watch for today. It also suggests that there's only a 40% probability that we're going to get above that number and stay above it. We have rebounded back to 33.30. That number at 33.37 will be significant. Interesting enough, that's also the S2 number. With this declining moving average in this pattern, while this looks very negative, it's most likely setting up a minor training range, and maybe this is more of that B wave. I saw a comment on the channel that said, boy, that sure was a small B wave, and it really was. If we get some weakness early in the morning, we could see that gap fill that we talked about on the cash at between 33.06 and the 33.27 level. So that will also be something else to watch as we go through today. But most likely what we're setting up here is just a sideways range, 33.06, but the low was 3300 even. The action that we're likely to see today on the close will be significant. As I said, this 33, 37, 38 level on the futures is going to be important. Reviewing the cash S&P, it's interesting, the market grid did uptick a little bit. The key numbers as we come in today will be that STX number, 3341, as it's set right now. We'll be trading at that level off the opening. If we stay just at the levels where we are now, depending on whether this recovery that we're seeing in futures continues into the U.S. Open, it's likely we could see this 3341 level hold, and we could actually move up and trade back towards some of the higher numbers. And it looks like right now we're going to be lucky to get out of the S range. Otherwise, the support range, 3360, 3371. And the first R1 number is 3390. Yesterday, we did see a move up. The RXT number was 3400.10. We saw a 3797.18. So we printed just right up to the RXT number. Then we retraced off of that, but we did manage to close reasonably strong as we finished at 3380. Just like in the futures, the 21 period moving average will be significant. That's 33.58. We're going to need to close above that level. There is right now a minus 0.20 on PPM2. That suggests if we do trade back under that level down to the 33.40 level or less, that's going to be a resistance point. So this is once again is why I'm doing the live stream at 1:30 New York time. That's the setup as we come into the morning. Next market I'll cover is NASDAQ. As in the S&P, we did see a decline toward the STX number. The low so far tonight has been 11,301. The STX is 11,327. We did trade through that, so now we're rebounding, suggesting that the S series, just like on the S&P, is going to be resistance at the 11,451, 11,516. It's looking very unlikely now that we're going to trade into R1 at 11,633. It's possible, depending on the news, what comes out from all this situation. The next market I'll cover is the US dollar. As I mentioned last week, we got to close above the RTX number, which was a short-term sell signal. We are trading at the 93.81 level. We have seen a bit of a retracement overnight. We've seen 93.53 has been the low, trading just below the S3 number at 93.65. And the same situation with this lower prices that we're seeing. We're going to continue to remain most likely under the 94.06 level and probably finish near the 93.65 level. And this is the weekly chart that we're reviewing. No real reaction in the gold market overnight. We're seeing it down $2 right now. The range so far has been a high of 1923, a low of 1851. So we certainly have seen some volatility. Currently trading at 1914, which, as I mentioned a couple nights ago, the high-end range for this week was that 1922 level, which was R3, so which we've printed that level. We're most likely going to hold below that 1922 level. I don't think we can get up to 1940 unless there's some crazy news that's ahead of us right now. The expectation is if we can close above 1903 today, that will start to set a bit of a positive tone. As we look at the daily market grid, you can see that R1 is 1922, so we printed an R1. If we get above that, the next level is 1928, so there is some further upside possible in this pattern, but I think that the numbers on the weekly chart will dominate. And then below this, 1910 is S1, 1903 is S2, and as I mentioned a minute ago, a close above 1903 will be a positive as we come into next week. This will complete the video. I will see you all on the live stream at 1:30 New York time on Friday. Thanks for watching.